All right, guys, listen up. If you are watching this live, please go retweet the tweet. Get some more people in here. We're about to kick this off. And I promise you guys, this is a very, very important topic. All right, so if you're just coming in, guys, Sunday prep time. Ricky Analog here with True Trader. This is the Sunday prep for the what is this? The 3rd? You say the 3rd? Yeah, the 3rd of April. This is the first Sunday prep of the second quarter of 2022. So, you know, this year is moving right along. They all seem to get shorter and shorter. Time just seems to elude us more and more. You know, it's not worth waiting till later to implement these things we're going to talk about today, guys. But first, a little bit of housekeeping. Make sure you're subscribed to the YouTube channel. And turn on the notifications. You know, we try to put out content. I don't want you guys to miss it. If you guys check out the YouTube channel, you'll see we've been putting out some new things, right? Like chopping up some of the Sunday preps, so just smaller little clips of just certain parts of it. We have plans for other things, so just make sure you guys are subscribed, right? So you guys get those. As always, Cobra, guys, if you're looking for a really good broker, the one that I recommend is Cobra. There'll be a link in the description. You can get 25% off your commissions as well as your first month of the platform free. And again, you know, I use a lot of different brokers. This is the only one I'll recommend. And 2, it's the one I trade daily. Like, these are my go-to guys. Spike Heat, if you guys aren't aware of who these guys are, check them out. These guys provide you historical stock data so that you can pull numbers from anything you can almost dream up, right? So like basically the way I use them is I will have a thesis that I think may have an edge in the market and I want to test that. Well, you have 2 options. You can collect that data manually on a spreadsheet, and I'm telling you right now from personal experience that it is tedious. It takes hours and hours every single day. These guys, or you can use these guys and you can pull that data historically and you can have a really large sample size without a lot of time invested in collecting that data. So make sure you guys, if you want to test your edge or test an idea, you need to have that data. So you make the decision. Your tools are everything in trading, guys. So spend the money on your tools. I'm not kidding. I can't overstate that. And last but not least, guys, Scripts to Trade. These guys create the awesomest indicators for TradingView and Thinkorswim, and I believe they're coding in other things now as well. They have a whole suite of already created, ready to go indicators for things such as like volume forecast, abnormal volume indicators, gap stats, all kinds of stuff. Really, really powerful stuff. And if they don't have something that you have dreamt up, and you can't figure out how to code it yourself, reach out to these guys because they can create it custom made for you. And I don't get any kickbacks or anything from like promoting these guys. I'm telling you right now, these guys are the real deal, and they give you an edge. I'm not kidding. All right, so let's get into the actual topic today. I work with a lot of traders, especially newer ones. And, you know, so I see a lot of the issues people go through. I actually had a few beers last night with another trader, and we were kind of talking about it because he's been working with some newer traders as well. And we were just talking about some of the things we repeatedly see. And one of the biggest issues I see traders making is that they get so focused on the near term. They are not thinking about the fact that this is a business and a career, and it should be a marathon. It's not something that needs to be, you know, paying your bills tomorrow. If that's why you come to the market, you're probably going to learn a really tough lesson. So the first, you know, thing I want to make sure is clear is to treat this as though it is a marathon. Pace yourself. Do the steps it takes in the order it needs to be done to grow organically and consistently, and understand that the profits and the PnL it shouldn't be your first goal, right? The first thing you need to learn to do in trading is to be consistent. And you know, if you can make 10 grand in a day, but you're not consistent, then it doesn't matter, because those big gains will be wiped away in the blink of an eye, and probably worse, it'll be more than what you've made, right? So, you know, one of my mentors is Goose. And if you guys don't know who Goose is, he's one of the moderators over at True Trader. This guy's got, over 25 years in the industry. He was a former market maker, and he's got a huge heart, right? He cares immensely about traders' success. And when I heard him talk about this topic, I don't even want to change the words he used at all. He did it perfectly. And what he was talking about was, you need to ask yourself seriously, and don't worry about what any of your peers think about you. It's not about them. The only people at the end of the day that matter are your family. If you're a husband, then it's your wife and your kids, or if you're a female, then it's your husband and your kids, or but they're the only ones that matter. Screw everyone else. Don't worry about Twitter. Don't worry about what you see on social media. Ask yourself, what kind of goal would make you happy? And let's talk PnL, right? So a lot of people, especially when they're newer, would tell you flat out, 100K a year would change their life, right? And especially if you can do that and also work your other job. And I'm telling you, that is definitely feasible. But 100K. So what you do is you reverse engineer that. What does it actually take to make 100K a year? Well, if you do the math, it's nothing more than $400 a day. And the problem I see is people that have, they definitely have the ability to make $400 a day. Maybe they have a $30,000 account. Maybe it's even a little less, right? You can make $400 a day on it. But here's the problem. I work with a lot of traders, and they would be happy making 100K a year. So they should be looking to make $400 a day from the market, to extract that money from the market on a consistent basis. But they find themselves taking $4,000 losses. Now, first of all, a $4,000 loss on a $30,000 account is insane. It's not sustainable. You guys have to learn how to manage risk. You have to learn what is an acceptable size loss for your account size. But also, if you're trying to make $400 a day, what the hell are you doing losing $4,000? Do you know that you just put yourself in the hole 10 days? And that's if you're consistent, right? If you can consistently make $400 a day, that's 10 days just to get back to where you were because you didn't manage your risk. You need to be asking these kinds of questions. If my goal is to make $400 a day, what should be an acceptable loss? I'd be very happy if, to make $400 a day, that doesn't mean one stock, right? Maybe you trade 3 or 4 names. Maybe you make $100 on each one, or maybe you make $200 on one, 50 here, 100 there. What should you be risking? Well, to make that, my advice would be, and remember, guys, this is not financial advice, and we'll get into the disclaimer in a little bit. But just make sure when you hear me say these things, this is from my opinion, from my viewpoint. You shouldn't be to make $100 on a trade. Hopefully you're not risking more than 100. Maybe you're good enough at understanding risk reward, and you're able to get that $50 of risk to make that $100. And so there you go. 4 or 5 trades. You can take $200, $300, $400 a day from the market and build consistency and do it in a very safe manner where you're protecting your capital, and that's your forethought, right? As opposed to just trying to swing for the fence every damn trade. And this problem, I'm telling you right now, stems from social media. That's where it starts. People see PnLs on Twitter and feel as though they are not enough. I must not be doing enough because X trader's making, $100,000 a day, or this guy made $20,000. This guy made $5,000. And here, why am I only making $200 a day? Why am I only making $300 a day? Screw that. Throw that out. Stop staring at PnL on Twitter and social media. For God's sakes, you wouldn't believe how oftentimes it's not what it's cut out to be. Maybe they're not photoshopping it, but maybe they're not showing you the red days. Maybe you're not getting the full picture. And then there are the occasional people that probably do Photoshop the stuff, right? They're just trying to gain subscribers to their room, right? Hopefully by now everybody that's followed True Trader for long enough understands you'll never see a PnL post from any of us. That's not what we're here to do. We're here to teach you guys how to trade safe. And I want people to understand that if you learn the process correctly and you learn how to be consistent first, compounding will take care of the rest. I am not kidding, guys. Like True Trader's always been really clear about this. You should actually be quite happy to make 1% to 2% a day on your total account. And people hear that and what? 1% to 2%? I see all these people here we go again, social media, making 20, 30, 40, 50%, 100% on a trade regularly, right? Well, I'm here to tell you guys, 1% to 2% is very amazing in terms of like account growth for a year. If you have a $30,000 account and you grow it 100 or 1% per day for 252 trading days a year, now granted that it's not, I don't think it's feasible to assume you're going to be able to make 1% every single day, but maybe you'll have some days where you make 2 to 3%. Maybe you'll have days where you draw down 1% or 0.5%. But you know, if we can average somewhere in that 1% a day, a $30,000 account grows to over $300,000 in a single year. Now, also keep in mind that's not what I'm just trying to give you a model so you can understand the power of small numbers compounding like that. But obviously, if you have bills to pay or you don't have a job other than trading, you got to wire out, pay your bills, and so that also will slow that growth down. But you guys got to stop seeing these numbers, these big numbers, and just becoming infatuated with them, and understand that this is a marathon. And maybe, you know, your $400 a day that you're trying to attain right now, so you can be that guy that's making a comfortable living, working a very short amount of time each day, that can grow, right? You can go from that guy that's making $100,000 a year to that guy that's making $10K a day. It can happen, but it has to happen in the right order. It's not something that can be forced. You can't just push huge size and think that you're ready for it. It doesn't work that way. It has to be done organically. You guys got to learn consistency. And I wanted, like, I think I've done this topic before in a previous Sunday prep, but there's certain topics, like I said, that really bear repeating, that are worth, you know, and I may do this one again, maybe another 6 months from now. If I keep seeing the same thing with traders I work with, I'm bringing it up again. Some things just, you know, are, you know, they're worth talking about over and over. I want it repeated so many times that you guys just be like, damn, Ricky keeps beating a dead horse. Yeah, well, if it keeps you guys safe, or it gives you guys the ability to stop thinking that you need to be like so-and-so trader, be yourself, be on your own path, and be happy with, just enjoy the journey, enjoy the process. And I'm telling you, keep your head down, work, grind, put the blinders on, and ignore all the social media noise, guys, and you will get to where you want to go. And it can be done. And I know dozens and dozens of traders that have had insane success stories, right? But it always comes back to risk management, not trying to force that growth too fast, and understanding like how to align your goals with what your reality is. So that's it for what I wanted to talk about in the beginning. Let's do the disclaimer real quick, and then we'll get into the actual prep. Guys, neither I, True Trader, or any of his representatives are registered as security broker dealers. I'm not a licensed financial advisor. Everything you hear me talk about is just my opinion. It is not a solicitation to buy or sell any stocks. Everything I talk about today is for entertainment purposes only. So here we go with the S. Let me get some water real quick, guys. All right. So a lot happened last week. And listen, I apologize for last week's prep. I was out of state traveling, and like I did not watch the market the whole week. I felt, you know, I didn't feel like I had my finger on the pulse. I promise you guys, I feel so much better about this week's prep just because I was here at my desk trading and watching daily, seeing what was happening. So the first thing to point out that I want to talk about, guys, is what we've been talking about for a long time now, and is finally getting where our monthly candle can break the high of the previous month. And we finally did that right at the end of March, right? So we're into April now. We have a new monthly candle. Doesn't even matter, okay? March was able to break February's highs. So at this point, there's a few different things that can happen, right? We could continue higher, go to new all-time highs, and the bull market resumes. We're back in an uptrend. Or we could have pullbacks and we could start to try to, it won't happen this month as far as the monthly chart is concerned, right? But let's say we have, and another thing is, we've had some really wide ranging months. You see these candles are very wide. It would not surprise me one bit if we finally have some of these months in the near future that start to tighten up and we start to get narrower price action on a monthly time frame. And so if that were to happen, let's say we tighten up in April and we kind of go sideways for a bit and make a bit of an inside candle. Maybe the next month comes April, May. Maybe in May we break April's lows and try to come lower, but we don't. Maybe we make a higher low. That really sets the stage for, one, these are monthly candles, right? So if we were to zoom in, you start to see, even the weekly candles, we're starting to build a base. You zoom into a daily, like, yeah, the base is getting nice and long. As long as we can get an inside month and maybe, some sideways action, that really sets the stage for the possibility of this big move up being digested, the correction happened, and maybe we do resume an uptrend. Or there's always the chance that we do take out lows, and then we really could start seeing these higher time frames start to follow through the same way the weekly did and the daily did when we started the correction, right? But like I said, the bounce where we bounced on the monthly chart makes a lot of sense because we did pull back down to the monthly 20. I mean, we didn't quite get there, but it was pretty damn close, right? And so it didn't really surprise me too much that was an area where we found support and tried to push. And I've said this a million times, it's not the bounce up that matters, it's what happens after, right? So we broke February's highs, now what happens? That's what's gonna matter. Can these lows hold, or do we have lower to go? I think I said this last week, and that is, the rebound so far, especially when we get into the daily chart, right? This rebound is very V-shaped. There was no real pullbacks until last week, right? We finally had some of that pullback that this move up really needed, right? This wasn't a healthy bounce. This really reminded me of that March 2020 V-bottom bounce. I'm happy that it finally had a pullback and digested a bit. So moving forward this week, there's some key things I'm looking at. We had Friday's daily candle has this nice big long tail, right? So I feel like the first level of support that should matter is going to be Friday's lows. That's why you see I have the alert set there. Obviously, I think I said this last week, guys. When I set these alerts, I don't want to set them down at the level. I want to set them ahead of them, right? So you see this alert here. It's not because I care about this level where the alert's at. It's because I want to know when we're approaching Friday's lows, okay? That's the first level of support for me that I'll be playing, where I will look at, are there longs setting up? And remember, the reason we look at the broader market is because I want to know, have we pulled back to levels where support and buyers may show up, so that we can look for those kinds of setups on other equities, right? Individual names. So if Friday's lows don't hold, the very next level where I would actually think I would look for that support is going to be the 200-day. Lots of traders, use this moving average religiously, and that's not just day traders, right? Swing traders, position traders, investors. The 200 days on everyone's radar, right? So it makes a lot of sense for you guys to make sure you have that on your chart and make sure you understand when the price is pulling back into those levels. After that, I would like, if that can't hold, the next level that makes a lot of sense to me is definitely down at that 20-day, 50-day confluence area, which was also the breakout level for that long trigger on the weekly chart. If you guys don't remember that, remember we had the low, the push up, we call this an intermediate high, and then the pullback that makes the higher low, and then the break of that level was what the long trigger was. So on the weekly and the daily chart, that is what could end this downtrend, right? This downtrend that started back in January, if this is going to be the bottom, then this is the setup that puts that bottom in. Doesn't mean it's the bottom, okay? Make sure you guys understand that, because as we just talked about on the monthly time frame, we finally have a lower high that's possible. We won't know if that's a lower high until we lose these lows, if we lose them, okay? So anything in between all-time highs and then these lows on a monthly time frame is just noise, okay? Keep that in mind. We talked about that same concept with Bitcoin. You'll hear me talk about that all the time, guys. When you're looking at a certain time frame, you need to know above and below certain levels, is noise, and everything outside of those levels, that's what matters. Those are your triggers. But again, let's focus on the daily chart for how we're going to approach next week. So those were the support levels. The first level of resistance I'm looking at is going to be these, let's see, February 2nd highs and February 9th. Those two highs there, as well as the level that, you know, where we had the daily bar break down. I think a emotional pop back into those levels is going to give a pretty good area to look for the sellers to show up and possible short setups in the individual names. And then of course over that is last week's highs, and then above that I didn't mark, I guess I could throw some alerts in where I would, the monthly pivot up here lines up really nice with these highs. That would probably be the next level I care about if we were to get above last week's highs. So that's the SPY in a nutshell for me. The NQ, of course, very similar, other than the fact that, you know, we are still below the 200-day on this name, as well as, I think I mentioned this maybe last week, is that this one still has not had that same long trigger on the weekly chart that the SPY did, or the ES. You know, when we pulled back and made this low and pushed up, this was a lower high, and then we made new lows, right? So whether or not that was just a bear trap right there that caught a bunch of people off guard, until we get a higher low followed by a new high, you can't really say that this downtrend that it was in is over with, right? But we did also still get the monthly bar break, and it was ever so slightly. Let's see, February's highs was 15,260, and then March's was 15,268. So like really barely broke February's highs. Who knows? April's here. Let's see if April does it with more convincing price action. But again, any break above those highs still has the possibility to be putting in a lower high on these higher time frames. And you know, my personal opinion is that we do end up putting in a lower high on the monthly chart, and we do end up rolling over lower. But again, I literally keep a sticky note on my desk that says your opinion don't mean shit. Why? Because it doesn't. It's just an opinion. All we have to go off is price action and levels. So you can have an opinion all you want, but you need to create contingency plans for when your opinion is wrong, right? So there's definitely things that will happen where my opinion may change, right? We may pull back to some levels, start to hold, start to base, and then start to break back up again, at which point, you know, I would really start to change my opinion. I think that's probably one of the better traits you can have as a trader, is it's okay to have an opinion. Come up with a bias, but make sure that you don't marry it. Make sure that you can change it on a dime, like immediately. Because it's okay to be wrong. It's not okay to stay wrong, guys. Let me see. Let's just talk about the levels first. Okay, so first level of support is going to be Friday's lows, just like we talked about with the ES. I like that you get that tail there. I like that we had that pullback after a big move up that never really gave a good pullback. So we had 3 days of selling towards the end, actually to close out last week. And we kind of had that bounce, right? We have that tail on the daily candle from Friday. So first level I'd care about is playing against this Friday's lows. After that, again, a retest of these levels here, where you're going to have the 20-day and the 50-day pretty much converging in the coming days, right? So pullbacks to those levels are definitely going to be having my interest for long setups on tech names, okay, and the growth names. Below that, I have the monthly 20 marked out, which is, make sure that sometimes my daily chart, when I put a higher time frame moving average on a daily chart, so this orange line is your monthly 20, sometimes this number on the label over here doesn't line up. So sometimes I like to check, guys. So 14, 40, 50, okay, so it is correct. And so that weekly or that monthly 20 is a level that I've got marked as a level of support where I would care to see if the bulls do show up down there, okay? After that, we have, let's see, 14K is going to line up perfectly with that monthly 20 anyway, so I'm not going to have a separate alert for that. This alert here that's in the 13.9s is, I'm just playing against these lows from late January, and then below that was a long trigger when we got back above yeah, that 13.9 is basically my level of interest for the long side. I don't think we come down there this week at all. I could be wrong. I can always be wrong, and I'm fine with that, but I honestly don't think we're going to get down there this week. And of course, if we do, there are levels lower that should seem obvious to you guys. Hopefully you guys have watched enough of these Sunday preps where you know, like, obviously these lows down here are definitely going to matter if we were to get there. Let's hop into the Bitcoin, which is still behaving really well, guys. Remember, we cleared that 46K level. We ran straight up into the underside of the 200-day, and it rejected. But what did it do? It pulled back and retested that breakout level, right? That to me shows that the buyers are in there. I think they're bullish on this setup here, and I think they bought this exactly where you'd want to see them step in, right? So the next logical area is to get back above the 200-day. If they can do that and speed up, then this 52K level up here is going to be very interesting for near-term shorts on equities that are related to Bitcoin, right? So Maras, Riots, Coins, there's a lot of them. Hopefully you guys know them all. And, you know, I will be interested to see if the first spike up into the 200-day stuffs again, but I'd really like to see if it gets through and holds. I'd rather see us push up into that 52K level. But on the downside, obviously last week's lows is where I'm looking to play against. The 20 days right there, you have your monthly pivot. And below that, you know, I'd be looking at the 50-day, 40K round psychological level. Yeah, I actually am pretty bullish on the Bitcoin chart at the moment. I think it is going higher. And if we do break above the 200-day and we don't just rip up into that 52K level, keep in mind, it's in an uptrend at this point. We've broke that downtrend that we were in, and it is looking healthy. Look, you can look to join trend on names like Mara and Riot. I know they're, you know, what's crazy is, like, if you guys know the backstory behind Mara and Riot, you understand, like, how scammy they are and were. But 2020 presented them these crazy opportunities to raise a lot of capital. And so, you know, you can't look at them as the same turds that they were, right? It kind of reminds me of, like, what COVID did for Moderna and Novavax, and like a lot of these companies that were legitimate POSs raised a lot of capital, did a lot of work, and, you know, are now legitimate companies doing legitimate business. So try to make sure you set aside that personal bias when it comes to looking at a ticker, and understand that, like, even if you think it's a scam, it doesn't matter. Scams can run, scams can go higher, scams can rip. So something like Mara or Riot or like GREE, there's BTBT, there's BTB, there's so many equities that follow Bitcoin. If this thing starts to push and all dips are getting bought up, you can look to join trend on those names, guys. So that's it on the broader market. Let's go and hop into, here's bar chart. We're gonna real quickly just look at the sectors. Should have had this up already, I apologize. So here's your sectors, guys. Utilities was the one that, you know, it keeps, look at this 1 month, in the 1 month period on utilities, it's up over 12%. That's pretty incredible. Again, guys, not something you typically see strong late in or you wouldn't see this very strong in an early stage market or the beginning of a bull market, right? Like, utilities typically get strong late cycle. And they're staying strong. And you'll see, like, if you guys go look at some of the names in that sector, some of them are getting a bit extended too. Consumer staples had a nice week. Let's go check out some of the charts on the ETFs. Retail, you know, we didn't quite get up to where I was thinking I wanted to play the resistance, which was the weekly 20, up there around 84. And it had that big reversal. So the one thing I will say is this has sold off really hard for 3 days, and we're down into this trend line. It may be due for a bounce, okay? So, like, you'll see some of the names we've got this week. One of them is a retailer that that's exactly the thought process behind that idea is that this sold off like this right into this trend line. So we may get a bounce play. When we get into the ideas, you'll see it. Don't need to expand on it too much right now. So financials, you know, we didn't get up to where I was hoping we would to play the fades. Had a big pullback here. you know, the inability to hold back above this 39 level, I feel like pops or shorts on this sector. Even if it doesn't work right away, I still think anytime we do get back up to this trend line, that I'd be even more interested in the fade. So I'm looking at pops, the fade on financial sector. Real estate had a big week, but I don't really trade names that are in that sector. So I don't like to spend too much time talking about this stuff. I do have a healthcare name this week. So healthcare, you know, the one thing I like about this is that this is just a very controlled, nice uptrend. Pullback, higher high. Pullback, higher high. And it's trending really well, okay? We are back above this level here, which, you know, as long as we stay above that, I feel like we should be trying to test these highs, okay? Building supplies and industrials, not really stuff I trade. I mean, they look good, materials especially. All right, utilities is the one I was telling you guys about getting extended, right? And so there may, if you guys want to play certain names for fades in this, there are a few like DUK, which is Duke Energy. They're getting pretty extended. You guys can take a look at those charts. It's not an idea I have for the week, but it's there if you wanted it. Staples. So we broke out of this downtrend here. I'm looking at it as though it's extended at the moment. So if I was looking to get long names in this sector, I would be doing so on dips, not chasing it up here, okay? Consumer discretionary, that's not what you want to see. You don't want to see that rejection like that and back under the 200-day. This is another one where I feel like pops or shorts on this. Communications. Yeah, there's a lot of names in this sector I like to play too, but I still think the downtrend's intact, and I feel like, you know, I would like to see it push higher before I look to fade names in the sector. I feel like it's more this price action right here in this area to me is more like no man's land. I'd rather it be either up here or down here. Those are the areas I'd rather play for longs and shorts on individual names in those. Biotechs, again, this one's starting to look more interesting. We are starting to curl a bit, starting to build a base. I would like to see it build for another few weeks, right? Sideways action. Let's see if we can finally get something going in this sector. We've talked about it quite a bit as the fact that, you know, out of all the sectors, it had the biggest sell-off. But it also, make sure you keep in mind, 2020, when we had that crazy market, the biotech sector was one of the biggest beneficiaries of it too. So just because something sold off a crazy amount, make sure you also acknowledge the fact that it ripped a crazy amount too. So just, you know, keep that in mind when you look at those things. Tech, I like the pullback. I like that Friday daily candle. Again, remember, just like we said with Nasdaq or the NQ, I am looking at Friday's lows as the first level of support on certain names. You know, we are still above the 200-day. Now it did not, you know, we did not reclaim back into this trend line. We did reject. You can see, I didn't even draw this line, but you guys can see this here. There's this clear level where it's just really struggled with right here. Pushed up, stuff, pushed up, stuff. We're pushing back up into it, stuff. Now, do we reclaim it? I don't know, but I think the 3 days of selling off and that, you know, bit of a hammer candle trying to form there on Friday gives us a level to play off of come Monday. And if it doesn't work, that's fine. Wants to lose Friday's lows, let it come on down to the 50-day, 20-day area, and we can revisit, okay? Energy and oil, still very constructive price action here. You guys can see this thing just kind of higher lows, getting nice and tight. Honestly looks like it's ready to make a move higher, okay? And oil as well. Oil a bit more extended, but still, these trends have been just so beautiful since they started. Weekly, yes, on the weekly, we're definitely getting a bit more extended on oil. Would like to see names pull back into support for longs on these names. But if they're gonna catch a bid and trend, you'll see when we get into the ideas, there is a long idea on one of the oil names too. So that's it for the sectors. Let's hop into the actual ideas for the week, guys. Let's see. For longs, strong stocks looking for continuation. The first name on my list is Macy's. Remember, I told you I had a retail name in here, and you know, I know a lot of people will probably look at this daily chart and be like, what does this mean, strong stock looking for continuation? yeah, it hasn't been super strong lately, but if you zoom out, guys, this really had, we've had this on our radar since way back here, and it's just, if you guys look at higher time frames, this still looks fine. We had the blow off, we pulled back, and we've been just traveling sideways, building a base. And why do I care about this name for Friday? Look at every time you get a candle like this after a 2 or 3 to 4 day sell-off into a level. Every time you get a few days of just up move, right? And like, you guys can just go back and look for all these candles. Here's one, just look for sell-offs and you get these candles and then we pop, right? This name likes to do this. And we've had this sell-off into a level that makes sense. So I've got 2 ways I'm looking to play this. If we gap up on Monday, then I'm looking at dips towards, what did I write down? Risk under Friday, I'm looking to flush to 24. 24 is the level I want to buy with risk under Friday's lows. If we don't gap up, I'm looking for this thing to flush towards Friday's lows for scoops, okay, with real tight risk. I think we're going to get a few days of buying on this name. Remember what we said about XRT too, guys. Whoops. If your man could type. Here. Big sell-off into this trend line. Now this one obviously doesn't have that same candle that Macy's had. But again, if you look, not all the other names in the sector look the same, right? I mean, I go through all of them trying to find what names look the best. I really like the Macy's. So that's the idea on Macy's. Either gap up and buy a flush into 24 with risk under Friday's lows. Keep in mind, super tight risk. It's not a name that has a ton of range. But if this thing closes strong, remember, I think it's going to have a few days of buying, right? If you lock profits in, don't be deterred by the fact that it's only got a $1.35 ATR. One, $1.35 on a $20 stock, that's a decent ATR. And two, if you swing it and you can get 2 days of that, you're getting like closer to 3 points of that, when your risk is going to be like a 25 cent, 30 cent risk on this name if you're playing against Friday's lows. All right, so the next idea is, and here's the one I talked about, I have a healthcare name, CVS, and this was another idea from, I think 2 weeks ago or something. I don't remember if I talked about it last week. I may have, but huge sell-off, okay? This was on news. The sell-off was, if I'm not mistaken, was a $400 million settlement for opioid stuff in Florida. If you guys look at their books, if you guys look at their balance sheet and their statement of cash flows and understand the numbers, that's not a lot of money to these guys. It's not like it's nothing, but it's still it's a nothing burger to them. And I honestly like this trade or this idea because I think you get a twofer here. I think you get a day trade / swing combo. Now, I'll talk about the swing real quick just because I got this drawn out for you guys. You can see if I were to put this on as a swing, and this is without a day trade involved, right? If I wanted to swing this, I'm not wrong until we lose these lows. The idea here is that this has already triggered a valid setup, and that was where the risk needed to go. This comes from a weekly chart, right? Pull back into the weekly 20, push up, pull back higher low, and then we break. So the target is these highs, and we didn't get there, right? So the target is still intact, and we've had this big pullback. So we're getting better prices right now. So I feel like you can buy this with risk down here under these lows, and you're getting a really good risk reward on the name. And when you get these kinds of risk rewards, it's okay to be wrong a number of times in order to get one right, because you're getting the risk reward that is going to cover all the losses and some, okay? So I may be willing to throw this on as just a swing by itself. But I think the way I'm going to play it is I'm going to look to buy against Friday's lows, which is that psychological 100 level. And if the trade works and it closes strong, I'm going to lock in my day trade profits on it, and then I'm going to swing a piece, and the risk is going to be even tighter. I'm not giving it under these lows. My risk would be under Friday's lows. So let's say we buy against 100. Friday's lows were what? 100.30. So like, I'm not going to stop right above 100. I'm not going to stop at like 100.20. when I know that psychological level is oftentimes very good support. So my stop would probably be, 99.39. So we'll give it a bunch of wiggle room, so that it has to at least get underneath that, the half of 99.5. So I would probably give it a 99.39 stop. And if you get $100 entry or somewhere close by it, right, you're risking like 60, 70, 80 cents for the possibility of, the target's up there at 111. Okay, so that is an insane risk reward that I would love to take any day of the week. And so that's how I'm personally going to play this. Flush against Friday's lows. I'm going to be scooping it with the intent of having a day trade that will also be swinging for a partial if it closes strong. If it gaps up, I have no problem at all buying a flush towards the gap to close area, which the closing price is 101.09. So, you're still going to get a nice, good risk reward on it if you do have that mindset of possibly swinging some of it. So that's the idea on CBS. The next name, as mentioned, is an oil name, XOM. And so this one is kind of a much different idea than the other two, right? This is more of this needs to do something first before I will even have my eyes on it. And what is that thing? I want it to break over, what did I write? 84, where's the idea? Over 84.61. And then I'm looking to buy flushes towards 84 and join trend. If you guys look, just have this little flag built in here. I want to see it break above these highs here, and then I'm looking to buy dips and join trend. Really simple. A lot of times people think that these trade ideas need to somehow be complicated or look like calculus formulas or something. It's not like that, guys. Keep things simple. A lot of times the simpler it is, the better. So that's XOM idea. Over 84.61, buy dips to 84 and join trend. As long as it keeps making higher lows and higher highs, you can stay in that trend and let it ride and let it pay you. If it starts to break down, you guys need to understand how to read a trend. Like if you're riding a 5-minute trend, higher lows, and that trend ends, you need to understand how to know that. And that's not what the Sunday preps are for. These are just for the ideas. You guys want to learn how to read trends, come over to True Trader. We'll get you all set up. Next name, Nvidia. I like two levels on this one. So the first level I'm looking at is, you see when we had this big push up and the pullback, this low here lines up really nice with that monthly pivot, 256. So I'm looking for a little bit more panic come Monday morning, flush down to 256. I'm willing to put that trade on and know how to manage my risk, right? I'm not going to ride it all the way down to the next level. The next level is 252, which is your annual pivot and your 20-day. So there's about 4 points of gap between the first level, I'll try it, and the second level, I'll try it. I'm not going to ride this thing 4 points against me so that I can add at 252, guys. If it pulls back to 256 and can't just hold that level, I'll bail. I'll probably bail for a point, something like that. I'll keep it nice and tight and I'll revisit it. And here's the thing. People hear that and they go, well, what if it doesn't get to the 20-day? Then I guess I missed the damn trade, right? It's still better for me personally than just riding it 4 points against me and then going, man, I should have just stopped out 3 points ago and I could be re-entering fresh right here. That ain't the way I play it. So just understand, when I tell you these ideas, guys, that my risk management hat is on at all times. 256, I'll play it, but I'm not riding it down. Okay, I will stop out, revisit it 252. I say that, guys, because I worry every time I put these Sunday preps together. I worry insane about you guys not managing your risk, and then somehow, I don't like to live with that kind of feeling like I didn't express enough concern about how you manage your risk in a trade. Okay. All right. So that was Nvidia, and the last name on this list, guys, is IBM. IBM, this is such a no-brainer level for me. If this flushes to Friday's lows, I don't know if it will because we closed at highs, right? But it also spiked straight up into the underside of the 200-day, and there's a lot of resistance up there. I am praying for a flush to 128 on IBM. That is such a no-brainer level for me. It's the ATR, it's the 20-day, it's the weekly 20, it's the monthly pivot, it's Friday's lows. It's, if you draw this line from right here, you see all these tops and you see all these levels here. dude, this is the kind of stuff. And when you see that buyers were there on Friday and that flushed down there and they bought that, it's like, yeah, can I please get a redo on that? I didn't see it on Friday, but if now that my eyes are on it, if I see this Monday and we get that, that quick flush down, gut check all the other people that swung it, I'm going to be a buyer. I like IBM into 128. So that is it for the long ideas. And I'll show you, there was nothing. Oh, you guys probably can't see that. Let me make it bigger. There was nothing in terms of oversold reversion setups that had my eyes. So nothing at 20. I believe there was nothing at 30. Oh, one chart, C. And I'll tell you why. So C is not on my oversold reversion setups, and you'll see why in a minute. It is actually a short idea. So that's why you don't see C in here. And then of course, I've said this plenty of times, is when I feel like I have to go in here and open up the parameters on the RSI to 40, now I'm just kind of like grasping for straws, right? Like I look through these charts. There's nothing on here that looks oversold to the point where I feel like it's just going to have that bounce. Doesn't mean these things won't bounce. I feel like maybe you could kind of say CVS fits the mold. Definitely getting to the point where it's oversold. It's it was in that screener. But again, in my opinion, this has been such a strong stock, just acting well. I'm definitely willing to put this on that strong stocks list. But again, it could probably fit the mold for the oversold as well, which just gives me even more conviction on this, right? But that's the reason there's nothing in this section of the Sunday prep this week. So we're going to move right on to the short setups. And like I just said, the first one on that list is C. The level I'm looking for on C is a pop back into 54. You've got your previous quarter's quarterly pivot, but again, it's not just the pivot that has my eyes, guys. Look at all these lows. Actually, I don't need to draw that. Pull back, bounce, pull back, bounce, pull back, bounce. Now we're through it. I want old support to turn into resistance here. So any kind of spike up into 54, and I'm there. Now I do have another level, which is the 20-day. So up into that monthly pivot at 55.50, I would revisit it. But just like the Nvidia idea, guys, I'm not going to ride this from 54 to 55.5, because when I take this at 54, I'm doing it with full size, right? I'm not going to ride something a 1.5 against me with full size. Why do I do that? Because if I'm right, I want to be right big. I don't want to be right small. I don't want to start half size or quarter size at 54 and plan on adding 55.50 and then it doesn't even get there. What if it works at 54 and I got half size? Now I got a little half size win. Full size for me at my levels, stop out when I'm wrong, revisit at the next level. That's how I roll, guys. And it's not right or wrong, it's just personal preference. That's how I trade. The next name on this list is PATH, P-A-T-H, and these guys got destroyed on earnings. The level I'm looking at is 24. I think 25 would be an absolute gift. I just don't think we get there, and the reason is just this intraday, right? You guys can see Friday. Was that Friday or Thursday? Let me check. That was Thursday. Thursday, when it opened, it had that push right up into the monthly pivot at 24 and stuffed and rolled over. So I just that was where all that volume was. So that's why I'm going to retry this trade up into 24 on a pop. It's 2 points from where we closed, and it's got a $2.66 ATR. But again, if this thing were to get to 25, I have no problem again taking a small loss if I'm wrong at 24 and ready to break out Thor's hammer into 25. And again, that still could be wrong as well. I go into every single trade, guys, almost assuming to be wrong, okay? And I think everybody can benefit from that because, if you assume you're wrong, it gives you the ability to stop out without hesitation. But if you think like there's no way your idea could be wrong, when it is wrong and you need to stop out, you're just gonna fight it. So that's a key takeaway, guys, is make sure you guys have that preconceived notion that you're gonna be wrong. That way you just stop out, no problem. And the last idea on this list is BBY. And again, this one had, I think, a headline last week about lower than what was expected foot traffic and stuff. So I really do think that a pop back in the 95 is a really good spot to fade this. There's no pivot there. It was last month's pivot, but again, just the daily levels, right? Pull back, hold, bounce, pull back, hold, lower high, and then when we broke this level, slam down, now pops back into that, should be a good fade for me. So I'm looking for 95 on Best Buy. Last section is overbought reversion setups. So AEP, it's not there yet. This is one of those ones where I would like this quite a bit higher. 105s, that's what I'm looking at, right? And so where did that level come from? Back here. You guys see that, right? Pretty simple, guys. As I said, the simpler the better. 105, a big emotional spike up there on AEP. It's not the most liquid name, but I think we're getting extended enough that you could put some on and have almost a bigger picture idea on it, where if it does reverse and then starts to make lower highs, could actually probably be a good swing, because I feel like this is going to at least at some point retest that 100 level, and then if it breaks 100, I think 98s are in the book too. The next name on this list is LAC. Again, this one is just, oh, I remember what I want to tell you guys about this one. Where have I seen this before? Oh, it already did it right here. So here's what happens, right? You get these big blow-offs, consolidation, and then this big rip. Now you can see, let's zoom in on this day here. This day right here is basically what we're looking at possibly seeing on Monday. Big spike, you look left, you see these levels, and you know this is probably a good spot to fade it. And what do you know? It gave a good fade, right? But this chart is telling me that even if you get that day trade out of it, let's not get stubborn and think you gotta be looking for a home run trade here, because the next day it gapped up above those levels and then it was gone. Okay, so again, this already happened and you already see what the possibilities are. So let's just transition that right over to this part of the chart and say, look, spike up into that level 42 area, see if they start stuffing it and possibly get short, but not get stubborn, and then remember what happened last time and go, oh, if that happens exactly the same way, and then Tuesday they gap it up over that level, well, by God, what happened last time? Well, it gave a great long. So make sure you understand, just because this is a short idea, there could actually be a long in here too if something similar to what happened last time happens this time. But I am looking to fade this on a big pop up into those recent highs, okay? All right, the last idea is kind of a twofer. Tesla, it's not like super overbought or anything, but I do think that the fact that we got this little flag kind of forming up here, I would like to see this trigger along, right? Break above this trend line and get them bulls charging and pushing, and then see it fail. And if it does, I think we're going to get a nice unwind on this. No reason I don't think this can come back and at least test 1,000. Now, the reason I say it's a twofer is because if maybe you don't want to play Tesla, maybe you don't like trading things that expensive, well, it's an EV, right? Well, what other EV names are there? QS. QS is not an EV, but they make batteries. And so it's going to follow that type of stuff. Now, again, it's not super overextended, but if Tesla gives that move, I think this is going to give something similar. And I think you're going to get a pullback into the 17 area. And this reminds me a lot of what happened previously. So you get these big moves, make a lower high, and then when we roll over, look, we retest it. And that was it. And then we came lower. So now we've done the same thing again. We made this run, and now we've broke it, and now we're retesting it. So we're right into the weekly 20. We're right into a bunch of levels. I really think this QS could give a good fade. But again, make sure you watch Tesla with it, because you always have to understand sector strength and sector leaders. And Tesla is the obvious one in that. So that's it for the ideas this week, guys. Let's get into some questions real quick. Let me see what we have here. Tommy Boy says, what if you're under PDT? My strat has been going full account on A+ setups and trying to get the most out of my 3-day trades a week. I understand that, and I know where that comes from, where people want to, I have a small account, and I want to get it to grow faster. But when and here's the other thing, I guess one of the things you didn't include in your little statement or your question is what's your experience like? Because most people with smaller accounts, not all, but most, are also newer traders that are still trying to learn, that just aren't quite consistent yet. And like, honestly, like the statement you made sounds like you're concerned with making money instead of learning to trade, because you will make money, but first you need to learn to be consistent. So I think sometimes being under PDT can actually be a bit of a blessing because it makes you be more selective, right? Yes, you have to be very picky about where you'll put your capital at risk because you're only getting 3 per week, right? Or 3 trades every 5 rolling business days. So that doesn't mean you have to go full account, right? Like, you have to understand risk. And just because your account's small, like let's say you have a $10,000 account, okay, here's another thing. Full BP doesn't mean you're risking the whole account, okay? You could be leveraged. You could have a $40,000 position because you use 4-to-1 leverage, and you might only be risking $100. You ask, how is that possible? Well, there's things like Tesla, right? You have a $10,000 account, you can't buy a whole lot of Tesla, right? Buy what, 40 shares if you use leverage? Well, you can buy 40 shares of Tesla and keep risk tight, right? So going full BP doesn't necessarily mean that you're risking your whole account. When I say you should only be risking a certain percentage of your account on an A+ setup, I don't mean you should only be using that much money. I mean you should be only risking that much. So there's a lot to unpack there. I hope I kind of touched on some things that help answer that. If you need clarification or I didn't answer it, retype it. I'm sure Benito will flag me on it and let me know, and I'll come back to it, okay? Javier asks, thoughts on PGR long at 111.90 or 110.90 area. There's another question after that from him, so let's check out PGR first, and then we'll come back, or we'll get the next one. 111.90, I see the level, I love it, and it's funny, you know as well as I do that I like the 110.90 or 80 level a lot better. You got too much confluence there, and I know what you're seeing. You're seeing this high of this candle lines up with the annual pivot, but let's be honest. This candle that gapped up there was on earnings and it just sold straight off. So the high of day on that, I don't expect to be support. But the high of day here where you have all this resistance, right? You can draw that line straight across. You see all these highs? That, once we get above, I would like to see act as support. So PGR flushing the 110.80 is a great level. It is a bit thinner, doesn't trade 2 million shares a day, so typically won't be something I trade, but I like your eye on that. I think that's a good spot. The next question Javier had was, what was the name? It was Walmart long, 147 or 146.50 area. Let's check it out. 140, what was the levels he asked? He said 146.50 and 147. I see the levels. It was previous month's pivot. Again, I'd rather see something that gets this extended, come back and retest the 20-day. Now, maybe it doesn't happen for a few days and then the 20-day creeps up there. Then I would probably like that level a lot better. I see what you see. And one of the things you guys will hear me say a lot, guys, is nobody can tell you your idea is wrong. The same way I look at every single idea I put out as I'm most likely going to be wrong. Guess what? That's because anything in the market can happen. So don't let anybody tell you your idea sucks, because trust me, I think your idea here is really spot on. It could be a great idea. Would I trade it? Probably not. I'd like to see something that goes straight up like this come back a little more significantly than just floating up here above with that gap still between it and the 20-day. Notice, like here, right? Pull back. Yes, it bounced from the 200-day, but eventually it did need to get back to the 20-day almost, right? So notice how big push-ups do tend to come back towards the 20-day. That's why I like the 20-day so much, guys, right? Because it's just time tested. You can look back on charts and just see how well these things act. But good eye on both those names, Javier. Let's see. David says, did you get busted up skateboarding? No, I did not. Actually, I did. I got, not this weekend, on Friday. No, I didn't fall at all, thank God. But like a few weeks ago, yes. I swear I sprained my hip, and that's like the oldest thing I've said in a long time. Ray says, what do you think about SLB and AMGN? SLB, I want it as a swing, actually, and I'll show you why. Let's zoom out to a weekly. I've had this idea. Oh, SLB. Had this idea. See, that's why I've already got it drawn. I like this kind of chart. Big old cup and handle kind of forming. That's why I have this alert set down here. I want to buy a dip, right? I don't want to pay up here. I'm not sure what you're asking about it. Maybe a day trade. Maybe you're thinking short. I don't know, but try to be a little more specific, guys, when you ask questions about a name, because I don't even know what you're looking at for it. As far as what I see on the daily chart is it's just coiling, right? So you have this high here, pull back, and then these make lower highs and higher lows, and things get nice and tight, right? So how would I play it if I didn't want to wait for a dip? I would wait for it to break these highs here, and then I would try to join trend. So over these levels here, and I would look to join trend. You can even try to get in. You can try to like get cute with your entries and get in earlier than the person that's waiting for this level. You could just say, okay, maybe we break these highs and then get above this trend line, and then I'll join trend there. But keep in mind, if it doesn't clear 140 or not 140, 43.72, it may still stuff up there, right? A lot of times when these trend lines break, they need to push and then retest them, and then you need to see them hold. So again, I would like to see over 43.72 first before joining trend on that. If it loses these lows from last week, it could come back lower. That's where I would look to buy it down here in this 35 area. So that's SLB. Again, I'm not sure what you were looking for on it, but if you guys are more specific about what you want to know, I'll try to answer the best I can. AMGN, you know, just been a nice steady uptrend, very mechanical. All dips get bought, higher lows, higher highs. So I feel like if you're looking to get long, you know, probably in that 240 area. But that's like, if you get that, you know, it's not a name I trade. I'm not big on trading AMGN ever, but that would be, you know, one of those things where just draw a trend line, right? Let's see, just go like this. And if you want to get involved, try to buy dips to the trend line, and if the trend line holds, you ride. If it doesn't, you bail. That's just the way to play them. Again, not a trade I would be involved in though. Chet says, can you take a look at MRNA? Again, guys, make sure you're more specific about it. This one's getting nice and tight. It's you know, it's a name I trade frequently because of the range and the liquidity. But you know, what I like to do is short big spikes in the levels. And here's one thing I will caveat with this, and that is when you see something that already tested at a level, rejected, and then makes a higher low, every time we pop back up there, the short gets a bit more dangerous, right? Because this is really starting to look a bit bullish here. You know, let's zoom out to a weekly chart, and you can see, you know, any dip that just now makes a higher low is really setting up for this thing to have a reversal. It's been in a huge downtrend for quite a while, and I just feel like it's setting up to be dangerous for the shorts. So again, I'm not sure what it was you were asking about it, but I do see it getting nice and tight and coiling up here, and I feel like, you know, eventually the break over 188 is going to send it. So that's MRNA, I guess, what I see when I look at it. Let's see. KH is asking, heard with 20K you should make $500 per day, and with 100K you should make 5K per day. Not sure, I always take win too soon. Was in AMD Friday 106.70, exit 106.80, and as soon as I exited, it went to 108.10. So KH, a lot of that like stems from understanding how to set legitimate targets, right? That's something I talk about all the time at True Trader. You can ask anybody that's over there; they'll tell you, like, having logical, rational targets is the opposite of that is like what you just described, right? Like just taking profit because you're like, oh shit, I'm green, let me take my money. That is not going to work, because you're going to have really small wins and you're going to have really big losses. As far as like how much you should be able to make with a certain account size, it's not so much like, stop thinking about how much you should be making and start thinking about like, how much should you be risking? That's what comes from account size. If you have a $100,000 account, you should probably be trying to keep your risk to about $1,000 when you're wrong. Some people would argue even less, like $500, 0.5%, and I would agree a lot of times. You know, and if you have a $20,000 account, you're under PDT, right? So like you have to temper your expectations, keep your goals aligned with reality. Let's see here, Cook CL, what's up, bro? I know him. When aiming to be consistent, what are your thoughts on daily profit goals? In my experience, that will frequently trying to force a green day and lead to disaster. I couldn't agree more. I don't have per se daily goals. I think the smarter approach to that is to actually, if you're gonna have monetary goals, make them weekly or monthly, because the second you go, I need to make X dollars per day, and then all of a sudden you're like either just shy of it. Like, what if you say like, oh, I just need to make $500 today, and there you are, you're at 400, and now you feel like, oh, I need to take another trade, just get to that 500 and I can shut it down. It doesn't work that way. You don't get paid by the hour to be a trader. You get paid by the opportunity. So instead of saying like, how much should you make per day, you should say, how much should I be willing to risk on any trade to get a good payout, right? Because it's just, we're rolling the dice with probabilities in our favor. You don't have to be right that often if you know how to get a good risk reward. So it's more about zooming out, the same way we do on charts, right? Like, stop staring at a 1 minute chart, zoom the hell out, guys. Stop looking at your daily PnL and start thinking of it in terms of weeks or months, or, you know, as long as you're progressing and being consistent, the money's going to take care of itself. And let's see, how frequently do you expect red days? That, you know, honestly, it really depends on the market and the strategy you're trading. It's hard to say like you can expect a certain amount of red days. I know guys that can trade, you know, red day, and it doesn't even affect them, because they know like that green day is coming, and they're just, you know, their reds are just small paper cuts, and they know, you know, when they strike and they're right, and they've got that risk reward, that one green day a week or whatever gives them their goals. But it's all about your strategy, what setups you take, and the market you're trading, and you just have to take what the market gives you. Honestly, like the second you start thinking you need to do X per day, you're trying to impart your will upon the market, and that never ends well, guys. The second you start telling the market what the market needs to do, the market goes, yeah, hold my beer, right? And then he wrecks you. So keep that in mind when thinking in terms of like what you need to do each day. Okay, so David was following up with he says SFM following the 20-day. It's getting tight in range, looking for a long. SFM, let's check it out. Yeah, I mean, if you're talking about a swing, I like this name. I like this chart. I don't know if I like the name, but I like this chart a lot. It really is tightening up. You had an inside day on Friday. You're riding that 20-day, and you have a setup too, right? You have an anticipation setup of a real setup. So, you know, here's your push up, your pullback, you make your low here, right? Then we push up. Actually, it has actually already triggered once. So let's just draw this out for you guys. See if I can get these to stay relatively small circles. So you can see how you got the higher low there, and then when we broke above this level here, that was your trigger. And so after that, you could technically already be in this swing trade buying dips back to the 20-day with risk under these lows here, and your target's up here. But it's getting really tight, which is I think what you were pointing out, right? And I just feel like you're about to get that move that breaks this little downtrend here. After getting that inside day on Friday, I think you just set your alert right here. I think over that, you buy that. And then you have, instead of risking way down here, you bump your risk up to down over here, like under 31.50. So like 31.39. In, you know, like I said, for swing, you would be looking for this as your first target up here at 35. Again, I wouldn't day trade this one just because it's so thin, right? It trades just above $1 million a day. So I probably wouldn't be looking to day trade it, but I like this look on this chart here, guys. Trying to find the question. Sorry, guys. Cody says, do you have any experience trading recent IPOs relative to their lockup expiration dates? I know all about it and I know how to do it, but there's another trader on Twitter that specializes in that. I want to say Trading Fit Girl is her thing. You guys should check her out if you haven't. And that I'll let her speak to that because that's her expertise. But I know all about that stuff, and yes, like I understand it. And she teaches all the nuances of that stuff. And you guys, if you guys want to learn about reading SEC filings and stuff, I've got a YouTube channel you can check out at any given time where you can go learn about reading filings. If you want to learn more than what's on the YouTube, you can always join True Trader and pick my brain there. But I don't like to talk too much about the small cap stuff in the Sunday preps just because unless it's A++ and it's setting up for Monday, it doesn't make my scan, right? Cage, could you please look at Roblox and AMC for long? AMC looks like it's setting up to go higher. I would ask about BABA and Neo and pins, but I know you always say you're always short at the pops. Also BA, please. So I'm not going to look at all those. That's a lot of names, and we're getting a bit long in the teeth here. Roblox. I'll take a look at Roblox. And again, I'm pretty sure it's going to be, I'll say the same thing about it as I would about any of the others, is that, you know, just draw this line, guys. Resistance. Pops into that. The 50 days coming down. I think any spike up into that 50 day and 52.30 area is probably a good short. Especially, like, you got to realize that's pretty far away, right? That we closed at 46. So a spike off the open up into that 52.50 area is like a for sure short for me on a day trade. Will this get above that 52.50 area eventually and hold? I don't know. If it does, that's the first sign of any kind of life. Because right now, this is just nothing but a perpetual downtrend, right? But above, if you want to know what it's going to need to do to reverse, it's going to need to clear 53 and then hold. So if you can get above 53 and then dips hold, you got set risk. The problem with it is you're not wrong about a reversal unless you lose these 36s, and that's pretty far away, right? It's a very loose risk reward, not something I would play. In AMC, you know what's funny, dude, is like it does kind of look like it has this setup, right, where you get this big sell-off into the monthly 20. It broke this downtrend, so it's a retest of that. It's also a retest of levels. If you draw a line straight across here, you can see all these. Let's try to get it a little accurate there. See all these levels, right? So it was resistant, support, broke. Resistance, broke. Retest. Will it hold? I don't know. The reason I don't know if I like the long idea is because I understand how fundamentally overvalued the company is. I totally agree. Technically, it looks like a long, but I just don't want to get behind that idea, knowing what all the insiders just dump every chance they have. Shares vest. Their CEO's acting like a freaking clown, just going to change their business model from being an entertainment company to being a investor in distressed companies. Like, I don't know, man. I can't really get behind that long idea, even though technically, hopefully the apes don't hang me out to dry on this because I'm trying to be as unbiased as I can. Technically, it looks like a long, and I think you're right on that. All right, Yogi's asking about OVV and LAC, and then I'm going to call it after that one. Okay, so let's go look at OVV long. He says around 53. Oh, Yogi brought me a ticker with some volume. Yeah, I personally, I'd rather see this at 51, and I'd like to see it not on Monday. I'd rather see this thing kind of push a bit and let the 20-day creep up and put us so the 20-day is lining up perfectly with these levels here, right? So, like, I guess technically we could say against this level here. What is that? 51. Oh, get off my screen. 51.26. That would be the level I'd like. And then he also is asking LAC long at 35. You want me to look at this as a long when I was just talking about it as a short? Come on, Yogi. Yeah, I see it and I like it. Again, I wouldn't do it because I think if this thing rolls over, there's no reason for me to think that this doesn't want to come down to the 20-day. And so, like, if I did put some risk on up in these levels, it's going to be tight. Obviously, like, it's up to you guys to understand how to manage your risk. I know Yogi knows how to. Me and Yogi are friends, and I trust him to manage his own risk the same way he knows I'm going to manage mine. But for everybody else listening, make sure that if you look at these ideas, you understand, like, if Yogi buys this at 35 and it goes to 32, you better understand Yogi's not in it still, okay? Neither would Ricky be. So, like, but yeah, remember, guys, it's a marathon, not a sprint. So, like, if you're trading a $10,000 account now, don't be swinging for the fences trying to make $1,000 on your $10,000 account. Just worry about getting consistent. Worry about learning the process, and eventually you'll get there, okay? And, like, when you have a $10,000 account, guys, I hate to be the guy to say this, but your goal is not to pay your bills with that $10,000 account. Your goal is to learn a craft that, if you do it properly, can provide for you for the rest of your life. All right, guys, stay safe. I'll see you guys tomorrow morning at the market. Peace.